Good afternoon, everyone. Welcome again to the Raffles Investors Summit. So I promise you that this afternoon will be a lot more heartwarming because we're going to talk about issues close to your heart. So I understand that there are two main points that I'm supposed to address today. These points came about, many of them, from the conversations that you have had with your managers and your relationship managers, and we understand that these are very pertinent questions, so we're going to address them this afternoon. The first one, which is the pricing situation in CCR. So CCR being the main prime location in Singapore, it covers Orchard Road, Marina Bay, all the way to Sentosa. I'm sure many of you are invested in these areas. You could hold multiple properties. And the top question on a lot of people's minds right now is that what will happen to the prices in CCR given the looming recession? So I just want to draw a sharp contrast between now and 1998 and 2008, which is when we have the two previous major recession or economic crisis. This time around, the market is very different given the policy changes that the Singapore government has made in the last 10 years. This has brought a lot of stability into the market in terms of mortgage ceiling, borrowing limits, in terms of the number of properties that a person can buy because of the ABSD tax. All this is just to make sure that no one person is over leveraged, and this is effectively trying to avoid a bubble. So in Singapore market, we don't have a bubble to date, which is because of all these measures that have been put in. In previous recessions, the CCR market drops the fastest, up to like 30% during one of the previous recessions. This time around, I don't think we will see a 30% drop. The price will correct, but not a huge drop like that, right? So if you are in CCR, you are invested, I will want to tell you that you may not want to dispose of your assets and your properties at this point of time. There will be a correction. The prices will taper down the fastest and most likely the highest when the economy recovers. So in short, I just want to summarize this first part here is that prices in CCR will remain fairly stable. Do expect a correction, but it will not be like a 30% that we have seen before. So if you are invested, this is a good time because rentals are also very high and you should see your property gain in value in time to come. All right, we will go on to the second question now, which is if you're looking to enter the market, do you enter now or you enter next year? So I want to answer this question from the angle of risk, because when it comes to investment, I always say the three important points is risk, risk, risk. If you can manage the risk well, the rewards will take care of itself. So there are two important risks that we do want to look at today, which is policy risk and pricing risk. And what do I mean by that? Let me quickly just explain. Policy risk really has to do with the cooling measures that the Singapore government can roll out, and we have seen already a few this year and we have seen many in the past years. So there are still a few areas where the tax rate can be adjusted higher. A lot of people are asking, can it go down lower? No, unfortunately not. It can only go up higher. So there are still a few more areas that the government can tweak this in order to cool the market. So that is something that you have to consider for yourself if you want to wait until next year, because from now till next year, there's still a lot of time, there's still a lot of months ahead. The government can anytime make a change in the policy. As far as pricing risk is concerned, I don't think the prices will go up further in 2022, but next year, with some of the new launches coming onto the market where the cost of the developer is already higher, there is a very high chance that they do have to launch at a higher price. So you will need to buy at a higher price if you're looking to enter the market next year. One possibility is that prices may taper, the prices may come down, and that is scenario one. That means tax rate goes up, prices may come down a bit. So you need to ask yourself whether is that beneficial for you. Scenario two is that tax rates don't go up, there's no cooling measure, there's no change in policy, but prices go up. So again, you have to ask yourself whether is that something that you can stomach. But there is a third scenario, which is the worst case scenario, which I really don't want to talk about, but I think it's important that you know, is that the tax rate goes up, the prices also go up. That means you get risk in both areas in terms of policy and pricing. And there is precedence in that. We have seen that happen before, so we cannot totally discount that. So if that happens, then you are really facing a double whammy. You are paying more for everything. So to look at this question of whether you should enter the market this year or next year, you have to see which one is more beneficial to you at this point, whether a policy risk or a price risk is more important to you, right? So there is going to be a QR code flash up at the back behind me. So if you have more questions, Feel free to scan that and send your questions through. The team will collate that, and we will look forward to answer some of these questions in the next forum or via our newsletter update. So thank you again for this afternoon, and I hope this has been helpful for you in deciding what to do in the last quarter of 2022.